Welcome to another episode of the Unlocked podcast. We are three business owners from a couple of different areas in the world, North Carolina, Minnesota, and as we have declared, Alberta as a nice little accent. Mark, thank you for being here for another episode. One thing that I have tried to figure out is I have no clue what episode number that we're on because we start out with an episode number and then we spin it off into a two-part series, and it's kind of getting a little...
It's Tony's fault, Chad.
Mostly Tony's fault, but glad to be back here today. My name is Chad Lingefelt.
I'm Tony Hokinson.
And I am Lars Johnson, proudly representing the 51st state of the great American nation. I think today we're going to look at the crystal ball. Is that correct? The crystal ball?
Or the systol ball, whichever one you want to go with.
Systol. You know, I think we've talked about my attention to detail. And so when I say systol ball,
there's none of it.
Yes, we are talking about forecasting, seeing into the future. Or if you're boring and an accountant, that's a shot at anyone listening that's an accountant. Budgeting. Let's talk about budgeting. The forecasting.
Why I think this is important. I think this is to just kind of set a basis for it, because we have a few moments here to capture our audience's attention before they go, forecasting, budgeting, boo. Mm-hmm. But here's the thing, and I want to say it in this simple statement. We didn't implement a functional budget until we were about a $5 million business. That's embarrassing to say, but we did. The next year, we had a 10% shift in net income. So we had about a 50% shift over time in revenue over a 2-year period. But over the next year, we had a 10% swing in net income. That is one reason that I would tell anybody to get a budget in place and to follow it. It will ultimately make you more money.
Are you suggesting, Chad, that having a plan and implementing a plan made things work better?
Never. I would never suggest that. I would just say,
okay.
Well, you go to work conferences a lot, and sometimes you hear people say, how much revenue did you do last year? How much revenue did you do last year? Right. And I think that's a lot of people, business owners, look at, right? And you've heard sayings, I think it's revenues for vanity, profits for sanity, or something, people talk about that. But anyways, there is some truth to that. If you go in, it doesn't matter if you're a $5 million business, but you're losing 5% margins, that $5 million means nothing. And I think where you go from
less than nothing.
Yes, you're right. So where you go from revenue to profit is a budget. You need to take your top line and figure out how much am I going to make off of it. And like you said, without a plan for that, you're not going to get there. So definitely very important for your business.
And again, to just pad that a little bit more, I think a lot of times as business owners, especially in the smaller businesses, you're looking solely at how much revenue have we generated and how much cash do I have in my pocket, or how much cash do I have in my bank account. And those are the two balance points. And my response to that would be, if you put a budget in place, especially as you're growing, but if you put a budget in place down at the start, you will have significant more money to reinvest in business growth. We oftentimes find ourselves getting to a sticking point where we don't feel like we can invest in additional employees to make more revenue, to have more expansion, all because we have taken every dollar that we've spent or that we've earned, and we've spent that exact same dollar. So the way I like to communicate it internally a lot of times is, if for every dollar that we generate, how much are we having to spend on expenses? How much does it cost us to operate? And how much are we actually setting aside for savings, for retained earnings, for profit and all that? So those are some major benefits, I think, that this conversation is practical.
Yeah. Before we even get into this, the first thing that I always have to remind myself, and I have to remind everyone on my team, is this isn't an accounting thing. This isn't for the accounting department to set the budget.
Yeah, agreed.
This is a team thing. Everyone has to be involved in setting a forecast or a budget so that everyone's aligned in doing this. If you try and get your accountants to set a budget and they push it down, how well does that work?
No, that's fair.
Right.
Tony, what has been your experience with setting budgets? Because I mean, there's lots of stuff we can talk about here. I'm sure these experiences will come up over time, but talk us through how you guys go about this.
Well, I will start by saying we do a poor job of it because I don't include others. Yes. So I didn't start budgeting probably until 3-4 years ago. And basically, as we grew, started creating a plan for, okay, like we just talked about, here's my top line revenue. What are our expenses going to look like? How do we make sure we have enough profit at the end of the year? Where we really learned the importance of it is once we started acquiring businesses and also adding more vehicles. So we also, with that, we finance them through debt, and then we have debt to service. So making sure that we know how much operating income we have each month to cover that debt service was very important. So started doing that, like I said, maybe now it's 5-6 years ago. I don't know. But historically, what I've done is just started with how much revenue do we think we're going to have? And then I look at two of our biggest expenses, which are cost of goods sold and salaries. Cost of goods sold, typically, we know based on historic averages. But then I spend a good deal of time planning for what is our labor expense going to look like. So what are all our employees' salaries? What raises are expected throughout the year? And kind of projecting that salary expense. And then the last thing I look at is any other overhead expenses. Those are typically going to be your smallest percent, anywhere between 12 and 20%, depending on your business. So I put the least amount of attention and detail into those categories, and just kind of look at historical averages, as well as any things that we have planned for the year. One thing we didn't think about this year with our budget, and the reason one miss on it with overhead expenses was purchasing of vehicles and then outfitting those vehicles. So I had just looked at historic averages and didn't look at what are we changing for the year coming, and didn't have that budgeted in.
And that's about $100,000 a pop.
One of the we do a really good job, and this is where I should learn from, is our marketing team, marketing manager. She does a really good job of planning out all of our marketing expenses. So we allocate about 2 to 3% of our income to marketing. And she has it itemized down to different categories of what we're going to spend and where. And we look at that at the beginning of the year and do a really good job of planning. So I think what you said at the beginning is having the departments involved is really helpful, because the more you can disseminate that decision-making down to the people that are closest to it, the better. So that's something this year we're going to try to do a better job of, is breaking down, the IT budget, and let the IT manager work on that, and so forth, vehicles and that sort of thing. So less looking at what percent it was in the past and more trying to project what the future is going to look like.
So what if one of your managers is terrible at budgeting?
It's a good question.
No names, Chad, but go ahead.
No, I'm just, that was a basic. So you just outlined, I thought, a really good principle around setting a budget, and then a lot of people are adding to that. So, we say, just let's put round numbers in. You set aside $200,000 for marketing. Well, the marketing director is now responsible for allocating that $200,000.
So we have not,
I'm not talking bad about your marketing director, because I'm not sure. I'm just saying, what if that person doesn't do a good job paying attention to that budget, or they don't plan for those expenses?
We don't have experience with that, because our marketing manager actually does a fantastic job with it. And we have not done that with other categories. So she has very good prior experience with budgeting. So actually she's practically taught us some about it. But when it comes to other categories, my plan for that would be to have the accounting and finance team coach the individual managers on that.
Gotcha. So then let's handle it from the reverse scenario. What have you seen that she does well, or they do well, in allocating the line item that you're giving them?
It seems simple, but honestly, just being intentional about it, actually planning, breaking down the categories and taking the effort, a couple months in advance to the end of the year, and actually looking at it and saying.
So you just have a big Excel sheet month by month? Is that you're doing line by line, month by month?
Yep.
Okay.
So,
and then allocating a certain amount per line item. So, you have social media marketing, $800 a month, something like that. And then you just go month by month.
We typically have actually
do 7 events this year, 7 trade shows or something like that. And it's going to cost.
We have not got to the point of planning the overhead expenses month by month. We do that for salaries because they're a much larger expense. But for the marketing budget, we're planning it on an annual basis. And again, not saying that's best practice, but it's better than nothing. So we break it down more by categories. Where are we spending it, and making sure that we come in under budget on the annual year.
Okay, so I want to ask you this question, because I asked our controller this morning this question. If you don't stick to the budget, if you exceed the expenditures for that given period, if it's for a month, quarter, a year, whatever, what do?
You don't exceed it.
But what if you
cut
do?
Spending?
That was kind of my point, because I think Chad's, laser and engraving and, typical locksmith tools. If you're not good at sticking to a budget and you see something shining and you end up buying it, but you don't have it in the budget, what do you do?
So we've had that discussion come up specifically from a marketing standpoint. We will say, hey, we want to do this. It's not in the budget. And ultimately, I have to approve that. And if they're overspend on budget, they have to stop spending unless I approve extra budget. So
okay, great response. I want to dig into this some more because I want to learn from the master here. If
that's a stretch.
How often are you reviewing the expenses and the budget to know that you have exceeded it? Say, for instance, not that anybody else would ever do this. That's partially sarcasm. Sorry. Passive aggressive. It's a thing I'm doing in 2025.
Just in 2025? You sure about that?
See, it doesn't work
that's
for you.
That's the thing you've been doing.
No, let it go.
All right. Sorry. All right. Back on track here. So if you were to not review your budget and your expenses until, say, 2-3 months after the year is closed, how would you know that your expenses have been exceeded? So what's the question is, how often are you looking at it?
So I'm going to use our marketing budget as an example because that's the one we do the best at. That is reviewed monthly. So our marketing manager gets the marketing expenses on a monthly basis, and she updates me if we're up or ahead or behind budget. I would say ideally you would probably review it a little more frequently than that. That's something we're planning for this year, is having our office manager run budgets and basically note how far behind or how far ahead are we on a at least monthly basis total, possibly even more frequently than that. So
Lars, go ahead. I'm dropping over to you.
No, I'm taking it all in.
All right.
I'm learning it all from. I just wish we had the marketing manager on instead of Tone, but
she'd be far better at this than me. But
I take a little different angle. I'm going to plug the book Profit First, because I read it, I don't know, 4 or 5 years ago, and thought that's the most ridiculous waste of time book I've ever read. It's the dumbest, most simplistic, logical thing ever.
Another one of my great recommendations.
And now I look at it and say, son of a gun. See, that's a new 2025. Son of a gun. I'm using new words here.
Really toning down your language a bit.
Thank you.
Is that a New Year's resolution of yours?
That's what I just said. So, Profit First, terrible book. Yeah, now I read it. It's okay. And now I'm looking back 5 years. It's been pretty impactful on the way I think and do things. So the whole mentality of Profit First.
I was going to ask you what your major takeaways were because you were taking so long to get to them, but you're getting there finally. So go on.
Thanks, Tone.
I will allow you to continue.
Thank you, Tone. So it just the main part of it is focus on what's important first, right? And setting aside profit. So, hopefully you haven't turned off the podcast yet. I wouldn't blame you if you had, because we started with the word budgeting, and honestly, not a hot start, but this is the important part. Budget for profit as part of it. Forecast for profit. Okay. Mm-hmm. That should be one of the main lines. In fact, that should be line number 1. So I'm going to give you a practical tip that we have used, because we forecast our revenue. Sure. We look at last year. We look at this year. We add some projects in. We do it month by month. We export it into Excel. Okay. We dump it all in there. We account for our cost of hardware is going to go up probably 3.5%. So, a retail sign of that's going to be about 7%. So you can kind of forecast. We know what percentage of hardware, labor, all that kind of stuff is going to be, because it looks the same year over year. Okay. So that's one thing. But now we're trying to allocate how to spend the budget. The first thing we decide is a company of my size historically is going to run at about 10, 11%. That's what you're probably looking at for profit. You want to get to about 13, 14%. There are some savants in the greater Chicago area, that might pull in 30%, 40%, 50%, whatever it is. But for us peasants outside of that part, a good goal is probably 13, 14%. Are you guys on the same wavelength as me here?
Yeah. Our company target is 14%. We've gotten close, but that's where our target is currently.
So 14%. So what I would be doing is line 1 would be 14% of revenue. 14% of revenue. That gives you your profit. Now, Profit doesn't take into consideration of cash flow, which is something we talked about. Because when you start buying vehicles, right, you'll buy a vehicle at $70,000. That's not an expense that shows up on your income statement. I'm not going to get into all that detail, but your cash flow and your profit are different. So understanding that's one thing. So a simple practical thing we have done is at the end of the week, we count up all the deposits we've made. And by that, I just mean you look at the statement. It tells you that. Take 3% of that, and it gets transferred into a different account. Just like that. And then the whole idea of profit first and the mentality that the book drives home in about 300 pages, and I'm taking 4 minutes to describe the book, and that's probably better than the 300 pages. However, it's scarcity. If you start segmenting things and looking at budget and enforcing scarcity, people will make do with what they have. Mm-hmm. So if you have a budget of, and I think this is probably a main concept and philosophy of mine is, if you have a budget of $200,000 for the year, okay, if you give away $10 here, $20 there, $50 there, it doesn't matter. But if you break that down into smaller segments, if Tony, would you ever just take a $20 bill out of your pocket and throw it on the ground? Well, no. Chad does all the time when he's golfing. But I mean, normally you wouldn't. But in business, that happens all the time. So bringing that down into smaller segments makes just so much more sense. So I'm talking about profit first, moving money into a separate bank account to take it out, so you've already made your profit.
Yeah, and I think what's interesting about the book is it kind of, you've seen the book like Computers for Dummies. It's basically budgeting for dummies, right? It creates a bunch of bank accounts for you to move your money into, which in theory is what a budget is. It is accounts that you are organizing your money in. Right. And the book is, like you said, allocating for it, just literally taking the money away. And it doesn't talk about using a budget. It basically forces you to put the money away, so you no longer have it. You have it; it's in a different account. Right. But really, that's all budgeting is. And if you're looking at it now, it does somewhat remove the fact that the money still may be in your bank account. But if you are properly reviewing your budget on a weekly, monthly basis, you can see when you're over and under and make sure you're doing that same thing. But really, the book's mentality of literally moving the money away enforces it and makes it impossible to not follow.
In your bank account.
Exactly.
And
I take offense to the fact you called people dummies, Tony. That's very non-Minnesotan of you. But
I said it's budgeting for dummies. I didn't say we're all dummies. I just said,
Okay, so the book starts out with I didn't call us all dummies. I'm just saying read the book because you're a dummy. But
no, I'm just saying it's very simple practices simple.
It's basic principles that everybody would already know.
Correct. Yes, and it's a good book. Like I think books like that are great. You can learn a lot.
You're a dummy. That makes sense. Chad, you were saying something, I think.
Yeah, appreciate it. So it starts out with the concept around the toothpaste mentality. When you get a brand new tube of toothpaste, everybody gets toothpaste.
Making it rain.
Toothpaste.
Santa Claus toothpaste. Wait, toothpaste Santa Claus. That's the one.
As it gets further down, and now you're squeezing every little piece out of it. And so the philosophy is, how do you shift your spending basis to using the final few pieces of toothpaste, or the little bit of toothpaste all the time as pieces of toothpaste. But anyways, so that you operate in that mentality continually, and that your company is operating in that mentality, so that you are being a little more conservative with every effort of brushing your teeth as possible. And that's really where it changed my mind. Reading that book, I remember I was on vacation, on our Christmas vacation between end of Christmas through New Year's back in, I think, 2018, and was listening to that audio book while I was on vacation, and it kind of had my jaw dropped the entire time because I'm a dummy, and it was helpful principles. And it took us so long to implement it into our business. And we actually just instituted a new controller in the fourth quarter of this past year. So we're starting fresh with a new controller this year. And that was the first thing that I gave them, was the book Profit First. Read it. And I want you to work on our budget for 2025 to follow these principles. And the thing that he came away with, just for all that, is that you have to plan for savings. oftentimes all of our mentality is you save whatever's left over.
Mm-hmm.
And so another way to save profit first is plan for savings. If it's not a line item in your budget, then it's not going to happen. And you're going to find yourself in a situation down the line where you have run out of cash because your spending has outpaced your earning and you need cash. Well, where are you going to go for it? And that's a real problem that business owners have all the time.
What do you have any recommendations on how much you do or should be saving for savings?
Well, if you read the book, he basically says start out with 1%. If you're generating $1 million, 1% is not going to make or break any major things for you, but it's the principle and it's the behavioral structure, right? So, many people at the beginning of this year are going to start physical activities and exercises, and it's going to be so difficult because they're going to want to get out and run 5 miles. But if they have run 0 miles, then it's going to kill them, right? So just get out and run a half a mile or walk a mile and pace yourself into it. So the book's philosophy is start with something that is so small that it will not eradicate your functional business operation. And then once you see that it works, then you'll increase it over time.
So, and that's, practically speaking, why we came up with 3%. So I basically just looked at on your bank statement every month, it will show you your credits and your debits. So one of them is money coming in, one of them is money coming out. So you can actually do that for the whole year and look how much money actually comes in and out of that bank account. Okay, so if we're looking to keep 14%, it works out to be just under 3%. If we take 3% of all the cash transactions that come in and out of the bank, that ends up being about 14%. That's where that number came from. It's not exactly 3%. It's near there, but that's a practical application. You can just look at all the money that comes in and out of your bank account, do that, times it by a number of what you're trying to get to, and that's a good way to start it. Now, the other aspect that this book's going to talk about, but I think a key component to marketing is, and Chad, I actually have to credit you with hearing you say this lots, is talking about making it easy to do the right thing and making it hard to do the wrong thing. So, when you use that kind of mentality for budgeting, simply it's, we have a secondary bank account. That's a different bank account. It's a different login. That's where the money goes, right? So if our controller needs to go into the kitty to get, some of the savings because we did a poor job managing cash flow, it's a process. Can't happen immediately. They have to go through me. It's a pain. And believe me, they don't want to have to talk to me. You can probably relate to this. So, it's there we go. Well, no, Tone I know his internet's slower. So when I make a joke like that, it takes him a minute to get there.
Well, the other thing I want to add to that is this something easy that you implement in your personal finances as well? If it
yes.
I don't know about you guys. I have a separate investment account that I cannot access the money in less than 24 hours.
I have a mortgage account. I have 2 mortgage accounts. That money just goes there. I have a savings account. The money just goes there. It's not an actual savings account, but it's an investment account. And then, all my investments are third-party managed, and it's intentionally disjointed to make it more difficult.
So you can't just go in there and grab the money. And so you're typically going to, and I can tell you for my sake, I am more intentional about the expenditures because I know that I've got to go through 3 steps to get to the money. So is it really worth all of that? If it isn't, I don't spend the money. And it's the same thing in business. If you functionally operate that way, just say, I'm trying to think of the practical translation, right? So you're running $1 million business, $1 million in revenue, and you say you're keeping $60,000 in the bank. Well, if you don't need all of the $60,000 to operate under, you're operating at $30,000. If you take 2% of that, 10% of that, whatever, and put it in a separate account, you will now make decisions differently based off of the fact that you only have this amount of money in there.
Scarcity. Yep.
And that's really where it comes down to budgeting, right? Is if I can, now that I have created this plan and now I'm taking that excess money and putting it over in a separate account, well, now I can operate differently. I make more disciplined decisions instead of, well, we had a good month, so let's all go out for a steak dinner tonight.
Toothpaste for everyone.
That was disturbing. But anyways, sorry. Back on track.
I was on camera. Sorry, there, guy.
So, shoot, I lost my train of thought.
Yeah, well, I
two things on that. So I think
probably.
there's a couple things about it that a lot of times people think of budgets as like, oh, they're there to constrict. I think on the other side, they are also there to let people know this is what you have to spend and this is what we're expecting you to spend. So we are working on setting up an employee engagement, employee entertainment budget for managers to use to go out to do fun things with their employees, have company events, and so forth. My goal with that budget this year is to make sure it gets spent. So it is also there of like we are allocating this amount of money per employee and we want you to spend it. And if you don't spend all of it, that's failing. So we want to make sure that people are doing things to keep employees engaged and do fun stuff for the company. So I also think it's beneficial to make sure that you're driving the decisions and behavior that you're looking for. And it's also a good tool to give people some ownership and accountability over what they're spending. So I think a lot of times, and this is something that took me a while to realize, that a budget isn't just to constrict, it's also to give people freedom of you have $200,000 to spend. It's yours to spend. Go spend it. Make wise decisions, as opposed to come and check with me on everything you buy. Hey, can I buy this? Can I buy that? Can I buy that? Well, no, you have this much money to spend on these things, and it's your choice to make those decisions however you'd like. So I think that's kind of something that typically gets overlooked when it comes to budgets. Is a lot of times they think of them as a constrictor when really there's something that can give people freedom.
Yeah, Dave Ramsey says a budget is telling your money where to go instead of wondering where it went.
Yeah.
Right. And I agree, man. When we first started talking about budgets, that's the way that I approached it was, man, this is going to constrict me. This is going to prevent the number of lasers that I can buy. And that was the challenge that you run into. But if you, exactly what Tony just said, if you put it together as a plan, you can then release that. So the worst part about business ownership is people constantly coming and asking you, can we buy this? Can we spend this? Can we do this? Well, if we've already designated that money and said, this is where that money is going to go, well, now I have been able to empower someone to be able to make those decisions. You've got $10,000 to spend on lasers. If you want to buy one great laser or two lasers, whatever, you've now given those people the ability to make that decision. I know we're talking about lasers, and that's
any good locksmith company does have a few lasers.
Yeah,
at least one's in Charlotte.
But here's the thing with it is once you have put together those plans, then what are the different aspects of that budget? So capital expenditures, how do you start planning for that? So you want to get into those things, debt retirement, you have a plan for savings. All of those types of things are going to be going into this budget. It's not just the lease and the vehicle payments and gas.
Yes.
Anybody can pick that up. Sorry, I just wanted to slide that in there and let it saturate for a minute.
Let it percolate. Yeah. Well, I mean, I'm trying to take this from a practical standpoint, because I would say that probably less than half of people that are listening to this actually do a formal budget with their team. And if I say less than half, it's probably closer to like maybe one person that's listening actually does that. Because I know even ourselves, the three of us were on a call over Christmas, more exciting holidays. Chad sitting there reading Profit First on his holidays, but we got together and talked about our finances as a group. So, I guess the first thing I'm looking at is kind of the practical way to attack this is, Chad, you talked about capital expenditures. And when we say that, we're actually talking about buying large things, a vehicle. Vehicle is going to be $70,000 a build out. It's probably 10 on the inside, and you got to wrap it in vinyl. That's going to be a decal or a decal in the northern states. But that's $90,000.
That's a fact. Nobody says decal.
I can't believe you say
all of Alberta does.
The only people that say that are Calgary and the 5 people that
I've never heard of decal in my life. So anyway, but if we're going to drop $90,000, right, how do we forecast and budget for that? So we can get into the whole thing about debt versus cash flow, and that comes down to your personal preference. Do you want to jump into that, Chad?
About what?
Oh, sorry. I just saw your face and thought you had something to say, but
no.
The idea of leveraging debt versus running it through cash flow, meaning do you want to borrow money from the bank? You know, just quickly on that, I look at it simply and know that, okay, our company should make between 11 and 14%. It does historically make in that range. Our cost of debt, meaning what the bank charges us right now, is like 5.5%. So if I take it from cash flow, right, it's costing me 14% or whatever our profit equivalent is, versus the debt is 5.5%. So right now, with the current environment we have, I am leveraging everything we can to buy vehicles. Why that's important when it comes to budgeting is remembering that that $70,000 expense is going to be monthly over, probably 5 years or however long the vehicle is. So when you're looking at capital expenditures, and if you're thinking, okay, we're going to expand our workforce or our revenue by 30%, okay, 30%, how many more people is that going to employ? What are the cost of their wages? But also, what capital expenditures do you have to make to put that person in the position to make that 30%? So you mentioned capital expenditures. That's kind of the way I look at it. If I was just starting budgeting for the first time, that would be, again, I'm just dumping it into Excel and starting to use that as a tool for forecasting.
Yeah. So getting back to the practical thing. So, let's put ourselves in the mindset. Like you said, there's one person probably listening that does a budget well, or otherwise they probably aren't have any real interest in listening to this. So the people that are listening to it are going, yes, I get it. I think we've probably, over the first period of this podcast, laid out a really good reason that you should be operating your business with a budget and a plan for your finances. So where do you start? If you're a small business,
right,
less than 10 employees, maybe you don't have a marketing
controller, you don't have a
controller, you
department
don't
head, all those. Yep.
Correct. Where do I start? Because it can be daunting, it can be overwhelming, and then you just go, yeah, I'm going to do that, and then another year goes by and you still haven't done it. So where do you start?
Yeah. So sorry, Don, I'm going to jump in with one thing. And very first thing, because I forgot to mention this earlier, was we hired a cost accountant years ago, and she changed the whole mentality of how I looked at things. When she started with us, we probably had, 10 chart of accounts, meaning in our accounting software, we had 10 lines that explained where the money went, right? And it was, how do you make a decision? Okay, we want to decrease our advertising, or we want to decrease our wages. Okay, well, I know that over the year we spent $3 million, but I don't know anything more specific than that. So the first thing to do is figuring out, how do we add more detail to our accounting, whether it's the chart of accounts and accounting software, but you have to have enough detail where you can make impactful decisions, meaning it has to be enough detail where it's small enough and specific enough that a decision on that account number will make impact. So I don't know if I explained that well enough, but Tone, I think you were going to jump in on something too.
Yeah, no, I think that's really good advice. The making sure that you have a logical account structure, also making sure it doesn't get too detailed. We have one that's a bit too detailed, and it ends up just being like, look at what is an amount that's going to be impactful, right? We don't need to budget things that are going to be $4,000 to spend a year. So this year, that's an exercise we've gone through, is regrouping those into what are the categories that depend the most. I'm going to be breaking them down into like more variable and fixed expenses. So as we add more technicians, what's going to go up, right? Fuel costs are going to go up when we add more technicians. Our building expense might not, because we're not changing our lease every year. So figuring out a logical way to break that down to give you the detail you're looking for. To answer Chad's question, I think the book outlines it pretty well. Where do you start? You start with how much profit you want to make. Figuring out how much money do we need at the end of the year to do whatever we want to do. That might be just to save. That might be to reinvest in the business. That might be to cover debt. That might be to buy a new building. But figure out how much profit do you want at the end of the year, and then just work backwards.
And how do you do that?
Expensive.
How do you do that? Because I'm going to say I want 100%.
No, how much money?
How much
not
money?
Percentage. Like, do I want 50,000? Do I want $1 million? Do I want 500,000? Figure out how much you want as an owner.
Do you just pick that out of your butt, or do you look at something historical, or how do you come up with that?
Well, it depends on your own personal goals and the business goals, right? So what do you want to do with that money? Have an idea of where you want to go. how much do you want to take as an owner? How much do you want to reinvest for it next year? How much net income do you want at the end of the year? That's going to be vary by person based on their own personal goals and business goals.
Let's take a $1 million business, because I think that's just an easy number to work with. And you say you want to have $100,000 of profit at the end of the year.
10%. Okay.
Yes.
$100,000.
So, I think, so you start with how much profit do you want at the end of the year? If you want $100,000, how much expenses I'm going to have? What am I going to need? What is my rent cost? Look at the fixed costs first. You know what they're going to be. Mm-hmm. How much are all those things? Add that up. Figure out what are your variable costs. Try to put a reasonable estimate on those.
And how do you do that?
What?
How do you do that? Put a reasonable estimate on your variable costs.
So we look at historical figures as a percent of revenue.
So what you did last year, what you did the year before,
easiest route. It's not necessarily the most accurate, but it's very easy to look at. Last year, vehicle expense was, I don't know what ours, so it was 2% of revenue. So this year it's probably going to be 2% or whatever. Like typically they trend pretty closely. We look back historically multiple years and figure out what the averages are. But then also, like we talked about earlier, if they're larger buckets, giving that budget to somebody and saying, here's the historical number. Is that reasonable? Do you feel that this is going to be adequate for what you're looking to spend this year? And then go through line by line with expenses and then work up to revenue and figure out what are our typical margins. Again, we look at historical averages and then how much revenue do we need to hit those margins. And sometimes it's going to be raising prices. Hey, this revenue isn't good enough. We need X amount of, Chad has talked to me a lot about this of what does our operating budget look like? What does that expense budget look like? How many hours do we expect to run in a given year? And what price do we need to hit that revenue target that we're hoping for? Another thing that we've looked at is what do we feel the business is going to trend towards? So are there any intentional efforts we want to make to drive certain levels of our business? So we have service business, we have project business, we have different sales initiatives within our projects. We have doors and frames, handicap operators, electronics. Are there certain areas that we're targeting more towards growing?
Right.
Since we spend a decent amount on marketing and sales efforts, where are we trying to grow, and what do we think that's going to actually, what's going to happen with that?
But you've also now escalated to a multi-million-dollar business, not $1 million business, because those are a lot of those.
True. Sorry. Yes. Right?
So I think the simple fact is when you're starting a budget, if you were in $1 million business, I think what you've explained, start with your net income. What do I want to achieve at the end of this as a value? Then turn that into a percent of revenue. So
based off your historical, which in our industry should be 10 to 14%.
10%. So now I have a revenue target that I'm looking for. Next step is to take my historical expenses and understand the percentage to revenue that they achieved. So as you were saying, automotive expenses, lease, tools and equipment, cost of goods, repairs,
vehicle repairs,
all of those things that are going to be, you're going to start seeing historical percentages. Now you have something to measure against. So you run all those, you calculate it, and you say, okay, well, it looks like I'm going to spend 95% of my revenue, and I want to keep 10%. So that math does not work out. I've either got to go in and start trimming 5% of different areas, or I've got to figure out ways, which is where Tony was headed, is to increase the revenue on the percentage to be able to achieve that. And then from that, you can get into different levers, but those are business operation tactics, I think. But from a budgeting standpoint, those are the basic principles that you would go by to identify that. So you have to have a little bit of historical data, structure what you're trying to make, and then put that into a spreadsheet. And now you have something to base it off of. What's the next step after you get that first rough draft?
Yeah, and I think a lesson we've learned in this is I used to sit down every year and with our leadership team and say, what do we think we can sell? What do we think we can sell? And then a lot of the feedback I got was, well, we don't know how we're going to.
But that was an exhaustive conversation.
Yeah. And bad idea, bad way to take it. But that's how my mind thought. Was, what do we want to sell? Like I like to try to think about the future and, hey, what do you think we can do? I think the better way to take that is what do we need to sell instead of what do we think we can sell? And like you always hear begin with the end in mind, right? The end is your net income. The end is your profit. What do you want to make? And then work backwards to what do you need to sell to hit your goals? And then look at how are we going to do that instead of what do we think we can do? Make sure that it's what do we need to do and how are we going to get there?
Chad, weigh in on this, please.
So, good principle, less of what do we think we can do, because that's very subjective and non-practical. So what do we need to generate based off of, we started with profit first, not to continue to plug the book, but do we get any royalties? No, we don't get any royalties.
Certainly not, because I said it was a bad book.
You did.
I said it was for dummies. So.
Amazing reviews. We can all.
It is a great book. I love it. It's a fantastic book. I would recommend it to anybody.
We can all agree on. It's a frustrating book. It is a terribly frustrating book because it does sound so simple, and the principles are simple if you just implement them. Mm-hmm. But it's like we were talking about the other week with StoryBrand. It is the reverse of what your brain would naturally think, and so you fight that while you're reading it, and then you have to go figure out how to implement it. But anyway, so the practical state is if you're starting with your profit first, and then it will dictate the revenues that you need to hit based off of your percentage of expenses. At that point, then you go, that is a whole business plan, a business operating strategy of how we go make that, how we go generate that. But we're not talking about that right now. We're talking about budgeting and making sure that we have, that we're not spending more than what we are earning.
The only thing I would say there is I think it is good to, and I said this, but it is good to begin with the end in mind, but also make sure that you're challenging that top line number a little bit, right? Like if I say I want to make, if I'm roughly $1 million business last year and I want to make $100,000 net income and I figure out my expenses and I need to go sell $1 million, that doesn't mean that you say, okay, I'm just going to go sell $1 million. Like you can also look at that and say, are there market conditions? Are there opportunities out there that say, hey, this revenue target is actually not going to be $1 million. It's going to be 1.4 million. I think I can get to that number. So still challenge that top line number and say, what do we think we can actually do? There's a, what do we need to do?
But Dodie, you're still talking about sales.
So
what we're talking about budgeting.
Well, budget's a part of sales.
Interesting.
Or sales is a part of budget.
That sounded so much like Yoda. I hope people picked up on that. Interesting it was.
I mean, sales is the top number on your P&L statement. It's part of
on your forecast. Yeah, for sure.
So. Agreed. But there is a forecasting activity. But how do you budget your expenses and make sure that you're keeping those things in line? So some of the really,
but the sale expenses are not the only part of your budget. Your income is.
Well, that's the top. Yes.
Right. That's why I'm talking about that.
How do we allocate it? Because there is going to be a variation of income, right?
Right. But if you can predict how much income you're going to have, you can adjust your budget accordingly.
To just spend more.
Yes. Or less, or have more net income.
Interesting.
Well, I mean, I don't think forecasting is just about expenses. It's about income and expenses. I think if you're looking at just expenses, you're only looking at half the equation.
Say more.
So, I mean, think about it as an individual, right? If you're an individual who makes $50,000, you're going to have a lot less of an expense budget than an individual who makes $75,000. So
25%.
About half.
Correct.
It's actually 50.
Someone's good at math.
No, that wasn't good at math.
I would say
75, 50%, not 25%.
Yes, whatever.
$25,000.
Anyways, so I think that's part. Like we're sitting here talking about expenses the whole time, but you also need to be looking at what can you produce as a company, and if you can increase your revenue, your sales, you can either spend more or make more net income at the end of the day. So
agreed. I would add to that or debate that a little bit by just saying I feel like for many years I focused more on trying to outsell our expenses. And there is a heavy balance between managing your expenses and understanding your budget, having a good rhythm around the review, making sure that you're not outpacing that spend.
Correct.
And managing increasing sales.
Agreed. And I think a really good point to that is back to what you asked at the beginning. How do you monitor it? Is also monitoring your sales, right? If you're planning for, let's just say we're a $1.2 million business and we're planning for $100,000 a month in revenue, if all of a sudden we've only had $80,000 a month in revenue, you might need to look at your forecast and adjust it accordingly. Like, we're down on sales. We need to constrict that forecast or budget a bit more because we didn't hit our mark. And now all of a sudden, if you had $50,000 to spend on marketing and lasers, now you only have $40,000 because we missed our sales numbers. So it is important to monitor it, not review it 3 months later, Chad, and make sure that you're adjusting your expenses accordingly if your revenue is not hitting where you want it to be.
Yeah, no, and to your point, right? We got stuck in early 2024 because we had a lapse in our budget review. We had a really good rhythm in 22 and 23, and then we had a lapse in our budget review for a quarter, and it was not ideal. Lesson learned, and so things have had to change to be able to fix that. Okay, forecasting. Let's just touch on that real quick because we really have to land this plane hopefully very soon. But the forecasting side, one of the questions on here: do each of us forecast, and are we good at it? I want to state this, and then I'll toss it over to you guys to give your input as well. I have always intuitionally forecasted sales, and I would say that's historically been terribly off.
Shocking.
How's the communication when it's intuitive? How's that work? Alignment's easy.
This year, I started the process, I think back in October of 24 for 25, of pulling a lot of data in from previous years, multiple year over year, and some calculations, and they were all very, very similar, all within very decimal point accuracy. So I then created some projections for 2025 based off of that information and 2 major adjustments that we were making this year. So I will hold that judgment until, if we're good at it, until the end of 2025, because I feel more confident in a actual data-driven forecast this year instead of a intuitional forecast.
That sounds like a pretty good plan, is basing it on objective data rather than out of your butt, I think, is just to summarize that works. And I think that's what I took away from that, is get started as well. Don't wait for 3 months. Don't wait for the perfect. If you ask an accounting team to do this, or ask Tony, it's going to take 6 months to get the perfect budget, and by that time we're already half through it. Yeah. So I would suggest export what you have from 2024, December 31st, put it into Excel, take your revenue times 1.2, because you're going to get 20% growth. Don't ask why I know that, just go with it. And then use that number, use all the percentages, and you have a foundational beginning budget. That's it. All your expenses are a percent of sales, and your sales is 1.2 of last year. That's your starting point. Get everyone on board, walk through it with everyone, have everyone understand, okay, does this make sense? Give it the sniff test. Okay, there's going to be wages, there's going to be cost of goods sold. Those are the 2 things that matter. You've probably heard me say that before, but those should be assigned to someone, whether that is you or your number 2 or whoever that is. But those are the ones that are going to make up, 70% roughly of your budget. Mm-hmm. So those 2 things, pay attention to, and then you can start diving into it more and more. If you're somebody that's brand new into this, you should have automotive expenses. But within automotive expenses, you should have fuel, you should have leases, you should have repairs and maintenance, you should have, I think that's it. If you're in the locksmith industry, you should have tools, right? Those should be broken down further, because you can then start paying attention to specifics within your budget. So main thing is get started, do it today, export last year's, increase your sales by 120%, and then just allocate those percentages. That's it. That's the place to start.
That's a good step-by-step.
Just to highlight something you said there, focus on the big items. You mentioned cost of goods sold and salaries, but like I said, in the overhead budget, don't get too granular. Focus on the large items. Focus on the things that make the biggest difference. If you can, assign an owner to them as much as possible, and just start somewhere and put some intent behind what you're going to spend.
Main thing is aim small, miss small. That's, that's the theory. The whole profit first, that whole mentality, making everything granular and smaller. The whole idea is scarcity. The smaller the budget is and the more focused the budget is, generally the less you will miss by. Mm-hmm. You can overdo it, but I would say the vast majority of us won't, at least for the first while. So I would say overdo it. Certainly to just get started. we haven't really talked about how often are we checking in on this. I think we touched on this a little bit. Chad, maybe do you want to just touch on how frequently, because I know you guys are good at this, and tell us a little bit about just in your quickly, just to overview the the charts you have in your boardroom. I know because you guys have a pretty extensive setup, and just tell us about that.
Well, those are all targets based off of income. So we're measuring activities and actions for income. So we do that month over month, and we report. Each team reports on that month over month. From a budget side, the financial director, now the controller, is responsible for reviewing that every month with us as the owners by the 15th of the conclusion of the month. So we wrap out December. We'll have a meeting by the 15th of January for a look at December.
To review the budget, meaning specifically expenses, and the forecast is something else. And I know what I was trying to get you to explain was you guys, you have basically big pieces of paper in your boardroom, right? You write everything up. It's very visible. So it's front of mind, because that's something we haven't talked on. If you make a budget, throw it on your desktop and, review it at the end of the year, say, how did we do?
Yeah.
It's a waste of your time.
Well, so to your point, right? We started this on the reporting side. It's getting it visible because we even are charted out, so it's got dots so that you can see progress. And you, at a moment's notice, you can walk in there and see, is this team performing good or performing poorly? What do they need to adjust? Right. And I'm a big fan of that. We have so much stuff digital, and when you have it digital, it gets tucked away, and then you're not forced to review it unless you have some type of a rhythm that you've already planned. You have it on the calendar that you're going into. So our budget is not plastered on the wall from a expense standpoint, but when it's on the calendar, and that was the reason why we had that lapse previously, because it wasn't on the calendar on purpose every month. It was on the calendar on monthly happenstance. So you put it on the calendar, scheduled automatically. It holds the controller responsible for bringing that information in. It holds me responsible for review, whatever, because you have a designated meeting that you're going to review that process.
Yeah, and that sounds like an excellent key takeaway. That's a good challenge for everyone. Just set up 12 recurring monthly meetings that you report on the budget versus your expectation. And I think that's great. Tone, give me a takeaway. Key takeaway from the episode.
Oof, you stole mine. Hey, start with profit first. Figure out how much you want to make. Work backwards. Begin with the end in mind.
All right. I think we're getting close to my favorite time, Tone. What are we talking about next?
Yes, next week, plan is to talk a little bit more about sales and marketing, specifically sales, sales strategies, target markets, figuring out where we talk a little bit here about revenue, figuring out how we want to hit those revenue goals. What are the markets we want to go after, the pros and cons of going after a specific market versus a broad market, and just overall sales strategies. So
I don't know if I like that topic.
I'm sure you don't, but we're going with it.
I will certainly hate it if Tony suggested it.
Yes.
Here's my challenge for everyone. Start out with your chart of accounts. If you have a chart of accounts that says hardware, labor, and service call, expand on that. You have to have enough granular data that you can understand what your decisions impact. Challenge is that if you're not familiar with your QuickBooks system or whatever it is, dive in there, talk to your accountant, try and understand it a little bit, and add some chart of accounts, because that will help you make more money. And I think that's the key here.
Yeah, that's what we're all trying to figure out.
Sorry, I'm gonna butt in here. We didn't get into this, but just real quick, did you guys use any special software for budgeting, or just Excel spreadsheets?
Excel.
Okay.
Yeah, we could get into a whole other conversation around how to use AI to improve that process, but I think the basics are start with a Google sheet or.
I mainly wanted to highlight that because it doesn't need to be complicated. People just put it into an Excel spreadsheet. That's way better than nothing.
Well, if they listen to this conversation, they would obviously know it can't be that complicated for us to get this figured out.
For sure.
Chad, bring us home, my friend.
Unlockedpodcast.com is the place that you can find all the curated content. You can subscribe, obviously, on Apple Podcasts, Spotify, anywhere fine podcasts are sold. And you can watch us goofy folks on our YouTube channel. And you can search that Unlocked Podcast or click the link on our website to get there. And we had originally said, and it took a lot to convince Tony to do 12 episodes. We have at least conquered that, and we have more to come. So thank you very much for those that have been listening and have been sending us messages and asking questions and giving us feedback. More topics coming your way. If you have something specific that you're trying to work on in your business and you would like to toss it our way so we can give you our perspectives and opinions on it, then please do so. Drop them in the comments below or shoot us a direct message, and we'll be happy to work that into our future episodes that Tony is diligently curating a fine list for.
Feverishly.
Uh-huh.
Thanks, guys. We'll see you next time right here on the Unlocked Podcast.